Health insurance is one of the strangest things in American life. You're expected to choose something that can financially protect your entire future. With the same rushed, confusing, overwhelming experience as trying to understand the terms and conditions of a software update. No one explains it. No one breaks it down. And honestly, no one seems to care whether you understand it or not. But the stakes, they're enormous. We're talking about decisions that can determine whether a surgery costs you $200 or $20,000, whether a prescription is $15 or $600, whether you walk into a hospital confidently or terrified of the financial fallout. And yet, most people choose their health plan in less than 20 minutes. Why? Because the entire system is designed to push you into a decision instead of helping you understand one. The hidden pressure behind open enrollment every year. Open enrollment hits like a surprise exam you forgot you signed up for. If you're employed, HR sends you a few PDFs, a benefits booklet that might as well be written in ancient Greek, and a link to a website where you re-asked to choose between plans labeled bronze, silver, gold, and maybe a high-deductible HSA option that sounds both promising and potentially disastrous. If you're self-employed or on the marketplace, the pressure is even worse. You're staring at a wall of plans with different premiums, different rules, different networks, and different fine print, most of which don't make sense unless you have a background in healthcare administration. Meanwhile, the clock is ticking. You have days, sometimes just hours, to make a choice that could impact your finances for an entire year. And because most people don't feel confident about any of it, they use the only strategy that feels safe. Pick whatever looks cheapest, or pick whatever I had last year, or pick what someone else recommended. Not because they know it's the best plan, but because choosing something feels better than drowning in information they've never been taught to understand. Why choosing the wrong health plan is so common and so dangerous. Let's be brutally honest. Most Americans don't actually know how health insurance works, and it's not their fault. We weren't taught this in school. Our parents didn't explain it because even they didn't understand it. There's no health insurance 101 class when you turn 18. Instead, we're thrown into a system where the terminology alone can sabotage you. Deductible, out-of-pocket, maximum coinsurance, copay, premium formulary, prior authorization. In-network versus out-of-network, non-preferred brand name prescriptions, embedded versus non-embedded deductibles, HSA compatibility. These aren't casual terms. They determine how much you pay, when you pay it, and how quickly your insurance actually kicks in. But because people don't fully understand these concepts, they rely on assumptions. Dangerous assumptions like a lower premium means I'm saving money. A PPO is always better than an HMO. My doctor takes my insurance, so I'm fine. The deductible is the most important part. If I'm healthy, I don't need a good plan. All plans cover the same things. Out-of-network costs aren't a big deal. If insurance approves something once, they'll approve it again. These assumptions, small as they seem, can cost people hundreds, thousands, even tens of thousands of dollars. And what's worse, you don't realize you made a mistake until the moment you need help the most. When health insurance fails, people land why it usually isn't an accident. Think about the last time someone you know got sick unexpectedly, or needed surgery, or got into an accident. The medical issue is already terrifying enough. But in America, there's always a second fear sitting right behind it. How much is this going to cost me? And that fear exists because the system has trained us to expect the worst. You could have a plan. Pay your premium every month. Go years without using it. And still end up with financial devastation because you chose the wrong coverage. And here's something the industry does not want you to know. Insurance companies rely on people choosing the wrong plan. They profit when you misunderstand. Your deductibles, your copays, your out-of-network rules, your drug coverage, your emergency room benefits, your preventive care limitations. Because misunderstandings delay or deny claims. They increase the amount you pay before the company has to. The entire structure is built around one fundamental truth. The less you understand, the more they make. Why this video matters right now. Millions of Americans are overpaying for the wrong plans. Millions more are underinsured without even realizing it. And almost every single one of those mistakes is avoidable with the right information. This video is here to give you what the industry refuses to: clarity. Real, practical, straightforward clarity that helps you understand how plans really work, how to choose the right one, and how to avoid the traps insurance companies count on. Because medical debt shouldn't be the reason someone loses their savings, or their home, or their mental peace, or their financial future. And yet it happens every day. Not because people made bad choices, but because they were forced to choose a plan in a system that does everything possible to confuse them. A promise to you. By the time you're done with this video, you will understand the biggest mistakes Americans make with health insurance. Recognize warning signs in plans that look good but aren't. Know how to compare plans like a professional. Avoid hidden traps that cause huge medical bills. Feel confident choosing coverage that actually protects you. You're going to learn things most people never hear. You are going to understand things that will immediately save you money and potentially protect you from catastrophic expenses. And most importantly, you're going to take back control in a system built to keep you confused. So take a deep breath, get comfortable, and let's break this down in a way nobody ever does. Because after this video, choosing a health plan will finally make sense. Most Americans look at their health insurance options and instantly gravitate toward the cheapest monthly premium. And honestly, it makes perfect sense. When budgets are tight and costs are rising everywhere from groceries to rent to gas, it feels natural to pick the plan that saves money every month. But here's the trap. A cheap premium often hides a very expensive reality. Insurance companies know people shop this way, so they design low-premium plans with extremely high deductibles, limited networks, steep co-insurance, and out-of-pocket maximums that can financially crush you after just one hospital visit. Imagine someone choosing a $40, $60 cheaper monthly premium. Over 12 months, they save maybe $500, $700. But the moment something goes wrong, a broken arm, a sudden illness, a specialist visit, a routine surgery, they're hit with a $5,000 or $7,000 deductible before insurance pays anything. Suddenly, that savings is wiped out in a single day. The mistake isn't the plan. It's assuming a lower premium equals a better deal. Americans aren't wrong for thinking this way. They are reacting to a system that forces them to juggle cost versus risk with zero guidance. The solution? You must compare premiums and deductibles and out-of-pocket maximums and predicted healthcare usage. If you rarely see the doctor, a low-premium, high-deductible plan may actually make sense. But if you have ongoing prescriptions, chronic conditions, specialist needs, or kids, cheaper premiums are usually the most expensive choice. This is why people say, I have insurance, but it feels like I'm still paying everything out of pocket. Because in these plans, you often are. Health insurance only starts protecting you after you've risked thousands. And that cheap premium, it's often just the bait. If there's one set of insurance terms most Americans misunderstand, it's these three: the deductible, the copay, and the out-of-pocket maximum. And to be fair, the system practically guarantees confusion. People assume the deductible is the most important number. And while it's important, it's not the number that determines your financial safety. The out-of-pocket maximum is. The deductible is simply what you pay before insurance starts sharing costs. But even that has layers. Some services bypass the deductible, like preventive care, while others require the full deductible first. Copays might apply before the deductible or after, or not at all, depending on the plan. Coinsurance, another misunderstood factor, can be 10%, 20%, or even 40% after your deductible is met. But here's the kicker. Your out-of-pocket maximum is the number that decides the absolute most you can lose in a given year. This is the number insurance companies hope you overlook. Plans with lower deductibles often hide brutally high out-of-pocket maximums. People feel safer with a lower deductible till they hit coinsurance and realize they on the hook for thousands more. Example: deductible $1,500 coinsurance, 20% out-of-pocket max, $9,100. Someone might think $1,500 isn't bad, but in a real emergency, their true exposure is $9,100. For families, this becomes even trickier with deductibles and separate family caps. Most people don't understand this structure, so they believe they're covered more than they are. This misunderstanding leads to millions of Americans being shocked by bills they assumed insurance would cover. But insurance doesn't work off assumptions. It works off rules, and those rules are rarely explained. One of the most painful, financially devastating mistakes Americans make is assuming that their doctor, specialist, or local hospital takes their insurance. People believe if they accepted my plan last year, they still do. But networks change constantly. Doctors switch carriers. Hospitals drop contract agreements. Entire networks restructure every year. One out-of-network visit, even an accidental one, can wipe out your savings. We're talking about bills that jump from $50 to $500, from $400 to $4,000, or from $2,000 to $20,000 simply because a provider wasn't in your network. And here's the scary part. Sometimes you don't even get a choice. You could go to an in-network hospital and still get treated by an out-of-network anesthesiologist, radiologist, or specialist. Surprise billing is still a massive problem, and although legislation has reduced some of it, it hasn't eliminated the financial burden. Another huge mistake: choosing a PPO when you don't actually need one. PPOs are often dramatically more expensive because they allow out-of-network coverage. But most people never use that benefit. If your current doctors accept an HMO or EPO, you can save thousands per year with zero difference in care. The key is simple. Before choosing a plan, confirm your providers are in-network. Don't assume, verify. Most people only learn this after the bill arrives, long after they could have protected themselves. Networks are the most overlooked part of choosing a plan, the most financially dangerous. Insurance companies count on this oversight. But once you understand it, you eliminate one of the biggest risks Americans face every year. Americans are shocked every year when they discover their medications suddenly cost hundreds or even thousands just because they switched to a different plan. This happens because drugs fall into categories called tiers, and each tier determines how much you pay. Tier 1 generics are usually cheap. Tier 2 brand names cost more, and specialty medications can cost thousands every month. The mistake people make is assuming prescription coverage is universal across all plans. It's not. Each company has its own drug list, known as a formularies. If your medication isn't on the plan's formulary, it may not be covered at all, may be covered at a high price. Even worse, some plans require prior authorization, step therapy, or quantity limits. Meaning, they want you to try cheaper drugs first, or they limit how much you're allowed to receive per month. This becomes especially painful for families with chronic conditions: diabetes, ADHD, asthma, heart disease, autoimmune disorders, depression, anxiety, and dozens of others. If someone relies on medication, they must choose a plan based on prescription coverage, not the premium. A plan with a slightly higher monthly cost may save you thousands per year in drug costs. But again, insurance companies don't highlight this. They bury the information behind multiple pages, confusing language, and complicated PDFs. Prescription coverage isn't a side issue. It's a central part of the financial decision. Failing to check drug coverage is one of the most common reasons Americans end up overspending, skipping doses, or struggling to afford essential medication. A plan isn't good if you can't afford the treatments you rely on. The right plan doesn't just cover you in emergencies, supports your everyday health. This is one of the deepest traps in health insurance because most people believe emergency care is simple. They think, if it's an emergency, insurance has to cover it, right? But the reality is far more complicated. While the law requires emergency rooms to stabilize you regardless of coverage, the billing part is where people get crushed. Some plans treat out-of-network emergency rooms like in-network. Others don't. Some cover ER visits fully after a copay. Others require the deductible first. And some require both a deductible and coinsurance. That means a single visit for something as simple as dehydration or severe pain could cost thousands depending on the plan. Even more dangerous. Some plans don't clearly define what counts as an emergency. If the insurance company later decides the condition wasn't life-threatening, they can reduce coverage after the fact. This happens more often than people realize. Urgent care versus emergency care is another point of confusion. Many Americans go to the ER for things that could have been treated at urgent care for a fraction of the cost. But because they don't understand their plans, rules, or pricing differences, they end up with massive bills they could have avoided. The biggest takeaway: emergency coverage varies dramatically between plans. You must read this section carefully before choosing a plan. Not all emergencies are treated equally, and the last thing you want during a real medical crisis is a financial one on top of it. Most people evaluate health insurance based on how healthy they are right now. And this mindset leads to one of the biggest mistakes in America: underestimating how quickly health can change. A single accident, a sudden illness, an unexpected diagnosis, these are the moments that transform a good enough plan into a financial nightmare. People often choose plans thinking, "I barely use insurance. Why pay more?" But health insurance is not about daily use, it's about worst-case protection. You don't buy car insurance expecting an accident every year. You buy it so if one ever happens, you're financially safe. Health insurance is the same, but with much higher stakes. Here's the truth. The most important number in any plan isn't the premium. It isn't even the deductible. It's the out-of-pocket maximum. This number is the highest amount you could lose in a bad year. Whether you get surgery, need Mr. Is, end up hospitalized, or require ongoing treatment, this is the number that protects you from financial devastation. A bad plan leaves you exposed. A good plan protects your future. But people often make decisions based on today, not tomorrow. And that's how financial disasters happen. Choose a plan like you're choosing protection, not convenience. Because when life hits hard, it will at some point, the right plan becomes priceless. Millions of Americans miss out on savings simply because they don't know certain programs exist. HSA's health savings accounts are one of the most powerful financial tools in the USCAT. Most people have no idea how they work. HSAs allow you to save money tax-free for medical expenses. You don't pay taxes when the money goes in, when it grows, or when you spend it on qualified health costs. It's like a mini retirement account for your health and one of the few tools wealthy Americans consistently use. But HSB's C-eligible plans require a high-deductible insurance plan. Many Americans avoid these without understanding that if they can afford the deductible, HSAs are often financially unbeatable long-term. Then there are subsidies through the ACA marketplace. Millions qualify without realizing it's especially self-employed Americans, freelancers, gig workers, and families earning under certain limits. Some people could cut their insurance cost by 50% to 80% with subsidies, but they never apply. Preventive care benefits are also frequently misunderstood. Many routine screenings, vaccines, and checkups are covered at no cost, but people skip them, assuming they'll be expensive. The government and employers offer tools that can reduce your cost dramatically, but only if you know about them. And most Americans simply don't. The final mistake: not treating insurance like a financial tool. It's not just coverage, it's strategy. And the people who understand that save thousands every year. Health insurance is overwhelming, confusing, and full of traps, but it doesn't have to be. Now that you understand the 7 biggest mistakes Americans make, you're already ahead of 90% of the population. You now have the knowledge the industry hopes you never learn. And with this clarity, you can finally choose a plan that protects your health, your peace of mind, and your financial future. If you found this video helpful, please support the channel so we can continue creating content that saves Americans money, stress, and frustration. Hit the subscribe button, smash the like button, drop a comment with any questions you have. Your engagement helps this channel grow, helps more people avoid costly health insurance mistakes. Thanks for watching. Stay informed, stay protected, and I'll see you in the next video.